Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about how to eliminate debt. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribed. I will try to personally reply to your comments. Let's get into the video. Let me first talk about what is debt. So basically, debt is described as a deferred payment or series of payments which differentiates it from an immediate purchase. Therefore, a mortgage, car loan, student loan, credit cards, and medical bills, debt can get out of hand before you notice what's going on. Whether your debt happens because of a job loss, unexpected expenses, or overspending, there's always a chance of reducing and eventually eliminating that debt. Tackling your debt takes time and effort, but combining strategies and staying consistent can help you successfully dig your way out of debt. Here are some ways that will help you get out of debt. First thing to do is stop accumulating debt. This technique alone will not get you free and clear financially. However, it will hold you back from making it harder to pay off. Lessen your impulse to make more obligation by taking a break from your charge cards or in any event freezing your credit. Freezing your credit bolts your credit report to new requests, making it harder to apply for new credit without much forethought. This progression is normally planned to limit data fraud. However, can likewise assist you with abstaining from opening new credit extensions and making more obligation. On the off chance that you do not have one as of now, presently is an extraordinary opportunity to make a spending plan. A spending assists you with aligning your going through with your pay, taking advantage of every dollar that comes in and guaranteeing you do not have to utilize charge cards or advances to get by. Build an emergency fund. Placing cash in an emergency fund may sound irrational on the off chance that you are attempting to escape debt. You could be utilizing that cash to take care of your debt as opposed to staying it in a bank account. However, an emergency fund can really hold you back from making more obligation. These reserves funds furnish you with a security net you can use for crisis cost, which saves you from going after your charge card. The ideal emergency fund holds 6 to a year of everyday costs, except you can begin by developing at any rate $1,000 or whatever you can bear to save. Use the debt snowball method. The less you pay towards your debt each month, the more it will take to take care of them. Interest can dramatically grow the cost of events for your debt reimbursement, and most debt adjusts pile up interest charges each month. Numerous individuals discover the debt snowball strategy to be a decent method to square away their debt. This technique permits you to gain recognizable headway by paying however much as could reasonably be expected every month towards your liquorless debt. Meanwhile, the cost the base installment on the entirety of your different debts so your record to stay on favorable terms. Whenever you have taken care of that little debt, proceeds onward to the new smallest debt and proceed with this interaction until all you have taken care of every one of your debt. The debt avalanche method technique is an option in contrast to the debt snowball strategy. Utilizing this procedure, you would start by paying as much as possible towards the debt with the highest interest rate. Once you paid it off, you would move to the balance with the next highest interest rate, and so on. The next thing you can do is ask your creditor for a lower interest rate. Higher financing costs keep you in the red longer on the grounds that such an extensive amount your installment goes towards the month to month interest charge and not towards your genuine debt. Notwithstanding, loan costs can be deductible and you can ask your MasterCard provider to bring down your premium rate. Creditor do this at their watchfulness, so clients with great installment chronicles are bound to effectively arrange lower rates. You might have the option to discover a lower loan fee by searching out advancements. On the off chance that you utilize a debt move to get a lower rate, attempt to take care of the debt before the special rate lapses. After that limited time period, your debt will be dependent upon higher financing costs. You ordinarily need to have great to superb credit to fit the bill for low interest or Equilibrium Move MasterCard. The next thing to look into is to increase your income. The more cash you put towards your debt, the quicker you can take care of it for good. Search for approaches to consult additional cash to commit to your debt. For instance, you could make additional money by selling things from your home, beginning a side hustle, or producing pay from a diversion. You might have the option to bring in more cash from your everyday occupation by arranging a raise or working more hours. Next thing you can do is withdraw from your retirement fund. In extreme cases, you may consider pulling money from your retirement account to pay off your debt. If you are not at least 59 and a half, you will face early withdrawal penalties and additional tax liability. The specific penalty you will face depends on the retirement account you draw from and how you spend the money, but the standard early withdrawal penalty is a 10% tax. Plus, when retirement comes around, your savings will be short, not only from the money you withdraw, but also from the interest, dividends, and capital gains you could have earned with that money. It is possible to borrow from your work sponsored retirement plan, such as a 401k. However, this strategy also comes with risks. If you leave your job, you will have to pay back the loan on an expedited time frame that could worsen your debt problems. Cash out a life insurance policy. You may have amassed some money in your entire or widespread disaster protection strategy that you can put towards your debt. Like tapping retirement reserve, this is an unsafe methodology that can accompany charge consequences. Changing out implies giving up your life coverage strategy, and it will at this point don't be easily, don't be essentially getting from your protective strategy may likewise be a choice. However, it might influence the demise advantage your recipients will get. Debt settlement. Debt repayment might be an answer if your records are past due or you owe more cash than you could reimburse over a couple of years. At the point when you settle your debts, you request that the lesser acknowledged a one-time singular amount installment that is lower than the full debt to fulfill the obligation in full. Banks commonly just acknowledge settlement offers on accounts that are in default or in danger of defaulting. Be that as it may, obligation settlement can adversely influence your FICO rating, so it should just be utilized if all else fails. You can settle debt all alone by haggling straightforwardly with your lenders, or you can find support from a respectable obligation alleviation organization. Be careful with any organization that encourages you to deliberately fall behind on installments with the expectation that you can settle your debt once your records are in default. Credit counseling. Credit directing offices are associations, normally not for profit, who can help deal with your accounts and obligations. With regards to taking care of debt, a firm acknowledgement instructors haggle for loan bosses for your sake to make a moderate obligation the executive's plan. Every month, you will send a single amount installment to the credit advising office. What separates the installment and sends it to your lenders for your sake. A obligation the board plan made with a credit instructor is altogether different from debt settlement. You do not need to be in default for credit guiding, and the objective is to cover your records. You can discover a credit instructor through the National Foundation for Credit Counseling or the Financial Counseling Association of America. The two associations convey credit guiding administrations through nearby PAT offices. The bottom line: while a portion of this means may appear to be little, like maintaining a strategy distance from new debt and building a rainy day account, they are significant for building a strong monetary establishment that permits you to effectively take care of your debt. Keeping tabs on your development en route helps keep you centered and advises you that you are drawing nearer to your debt payoff objective. Thanks for watching this video, and do not forget to subscribe to my channel.